We took a week off.
We did. It was Easter.
It was. I was incarcerated.
You were, you know?
Yeah, I was hoping maybe a little bit of good behavior. In a few months from then, we'd be able to do this podcast. I'd call you over the phone.
Oh yeah, nice.
But yeah, no, I'm not gonna get tangled up in any of that kind of mess again.
No.
So we won't be missing any weeks. But yeah, we were gone last week. Just kind of missed 2 ships in the night passing by.
Yeah.
You had some Easter stuff. Things just didn't work out scheduling wise.
No, it didn't. No.
But we're back.
We are back.
We are back, and we've got the market covered. There was nothing that escaped us last week that we're not going to cover. We've got everything wrapped up in a nice little neat package, I would say.
Sure.
I'm Cody from Wall Street Breakdown.
I'm Anthony from Wall Street Breakdown.
You are.
You're
looking good. Your tricep is getting strong.
It's getting better.
You are moving an arm around like
I got full mobility back.
Yeah.
Right?
You haven't come apart at the seams.
No.
But
it still feels like it just flaps in the window sometimes, right? It feels...
You're going to make it.
Oh, I think I am, yeah.
I've got faith in you. It's a little bit of faith only, but I've got the faith. Somewhat. I'm going to be honest with you.
A little bit's better than none, right? So I'll take what I can get.
How was your week otherwise? How was your 2 weeks? We missed a week. They want to know how 2 weeks of your life were. 2 weeks of your life were outstanding. Tell me that.
It was very outstanding.
Good. Mine too.
Yeah.
Perfect.
Yeah.
I'm glad we're living an outstanding life. Things are excellent.
Things are looking up lately.
Yeah, absolutely. Summer's coming. The days are longer.
Yes.
This is late. This is late Sunday night. This is probably not going to come out till early Monday morning. Good luck with that, by the way, because that'll be you up all night getting this up. But it's still nice out. It's not nice. It's chilly. It is
chilly.
It is
but
chilly.
But the sun is
but
still
the
out.
sun is out.
Yeah, it's nice.
Spring has sprung. It's upon us. Yeah, look at us. We're living on the precipice of summer. It's going to be a hell of a summer. The stock market has not had, it's been a kind of a chilly winter, an extended winter for the stock market as well.
Right.
So while we're starting to get out of it, I hope that our topic every week starts to get brighter, like it did in 2017.
Oh, 2017.
Do you remember 2017? Oh, the days. 2017, buddy. Those were the
glory days.
Those were the glory days for real.
Oh, for sure.
This toppy market makes for a lot of pessimism. There's a lot of really, like sullied people on the television. They're all kicking rocks. You think they made no money ever. Everyone is just so pessimistic now. I don't know, man. Missed a week. The videos, we've got a good idea, right?
We do.
This video on Thursday, we're going to try this idea from now on where we're actually going to do kind of a devil's advocate bit where you're going to play off of someone who's having a contrarian point of view to what the mainstream point of view is about a topic that's like a point of contention, right? Something that you hear in the media all the time. We're going to see how you do in front of the camera.
Yeah. This is going to be an actual video, not just like a podcast or something.
Yeah, this is going to be you in front of the camera. So Monday I'm coming out, which is tomorrow. By the time you listen to this, it's probably today. I'll be coming out with new videos, new series, 4 or 5, maybe 6 videos long, depends. Yeah. I'm going back to like what we were talking about. I'm really going to hit on people getting started in the markets and not really get off topic here. So I'm going to do 4, 5, 6, depending on how many I can get out of this lingo, just straight market lingo, the things that you hear when people talk on the television, when you read, whether it's a quarterly report or an analyst report or whatever it happens to be, prospectus, if you're buying something, it could be anything. When you look at things and you look at the lingo can really throw people off. I'm going to try to simplify it as much as possible, really break it down to just the nuts and bolts and really use it like in a practical way where I can like show you, hey, this is a couple of examples of how it could be used, or lingo of a certain kind that has different words that mean the same thing. You'll have analysts have conversations between each other on television that'll use words that are different that actually mean the same thing in the conversation. And if you're a layman and don't understand, you listen to it.
Oh, for sure.
Was that 2 separate things? But it's not. It's just the jargon of the industry, right? So I'm going to try to go back and break that down, simplify this, go back to what we were doing, the roots that we started at the beginning of 2018, which was the idea of really bringing people the idea of how to get started. And I think overcoming the barrier of lingo is very, very difficult. Yeah. That is one of the things that really boxes people out. They feel very foreign to it, like they're listening to Japanese.
Oh, for sure, definitely. Yeah.
I'd like to get a lot of it on the table, give you some examples of how that's practical and how that actually works in reality. And hopefully you can take away from that, hey, that seems really easy to implement and pretty easy to understand. The next time I hear that thrown out in a conversation, I won't have to stop mid-sentence while people are talking on the television and start and think about a certain word. Right. I'll be able to instantly implement it into what I'm hearing.
And these videos will be coming every Monday.
I'm going to do this for the next set of Mondays, absolutely, right? So the idea is I'm going to try to get, and I've got a really serious list already compiled of just jargon that you hear used on a regular basis, whether it's, people talking about a sector or a 200-day moving average, whatever the word happens to be or phrase happens to be that might get you confused. That, the difference between capital expenditure or market capitalization. You hear words that sound very similar, but mean things that are completely not relevant to each other whatsoever. Right. Sure. Very easy to get things confused, right? So I want to get things much more streamlined for people, to just give them the ability to go back, click a selection of videos that are 10, 15 minutes long each, takes up an hour and a half, and you could get through the lingo of 40 phrases or 40 words that you're going to hear really commonplace. You throw on CNBC or Bloomberg or BNN up here in Canada, all of a sudden things sound so much more fluent to you. And the idea of you being able to then take in the information about these companies that you're really concerned with, that's what you're concerned with, that becomes a lot more viable because the jargon isn't boxing you out.
For sure.
Where you just are like, man, I'd love to learn this, but this is
you turn on CNN or whatever and you listen to him talk for the first time and it's just like blah, blah,
blah.
blah,
Politics
blah,
is very much the same
Sounds
way.
Like the peanuts
you
people,
go to CNN or Fox News and you hear a lot of political jargon, and if you're not hip to that or you haven't been around for a long time, you don't really understand the cadence that they speak with specifically.
Oh, for sure,
you get it in a much more macro way. Like, you can understand people talking, but the minutia of things gets lost, unfortunately.
Yeah, for sure.
So I'd like to streamline that. So we're expecting that. But this thing on Thursday, we're gonna have you. You're gonna sit in front of a camera. I'm interested. I'm interested. Yes. People are probably interested in this podcast though. So we'll let Thursday speak for itself. Why don't you lead this?
I will lead the flock.
You are the leader. I will. You be the shepherd, and I'll be your sheep, and we'll get through it together.
Well, as you brought up, the markets were a little cold this week, which were a little bit of rough seas in the market.
It was up in the middle of the week. Look, we were down. Okay, we were down to start the week. Then we were up. There were 2 days up over 1%. Then we were down again on Friday because people just bemoan all these things that we're talking about because there's just not enough news going on. And, peas out of the range and the things we've talked about. And I'd hate to just beat this dead horse over and over again. But the song remains the same, Ant. Like,
it does.
That would be my big issue, is that I would be the same hypocrite on the news. That if I came out here every week and gave you a new reason why the sky is falling or things are fantastic, I would be the same as the people that I'm totally contentious with. Mm-hmm. Where I say, like, this, I don't buy any of this rhetoric you spew out here.
Right.
You just change the dialogue over and over again, confuse the retail investors because you've got to fill television time or whatever. The fact is, we're at a top, price to earnings are at a range, things are going to be choppy. We've been saying this how many weeks now? 10 weeks? 12 weeks?
Long time.
15 weeks? I remember saying this before the end of 2017.
Yeah, you did.
And I'm not like saying like, hey, I called like the top or anything.
Just kind of
I was just saying like, hey, the ranges are getting way out there. A lot of that EPS from the tax reform that we were looking at in December had already seemingly been priced in. And I know we're expecting, as earnings season kicks off next week, a lot of that EPS is supposed to be there. We'll talk about what analyst estimates are for EPS and how much it's supposed to be up over last year just from the corporate tax reform that the U.S. got, and how much these companies are supposed to benefit. But we had a lot of that stuff priced in. We knew the top was here. The top is here. It's here. It's here. You're living in it.
Yep.
You lived through prosperous gains. Things are still very, very sustainable. You just have to be
for sure.
You got to be a little smarter with your money now. Now you really have to pick the best horse in the race. It's not that every horse is going to place and make money. This is going to be a lot more sector-specific one-horse races where good companies that thrive are going to pull away, and they're still going to make money because the economy's good and the money is out there. The Dow closed the week. Obviously, these are down numbers, right? 23,932. Triple-digit moves for the Dow. 34 of 45 trading days since February 1st. triple digit moves, 100-point moves for the Dow, 34 of 45 trading days since the 1st of February. Not all those moves to the downside, though.
Right.
Don't get that. That's the choppiness we're talking about, is triple digit down moves, up and down, up and down. We may have a few more, and we obviously do have a few more downside ones than upsides, because we're down on the year. We know we're down on the year, but over 2 years, we're up so ridiculous. Or up over 3 years, we're up considerably. So on the year 2018, we are down. But did you just start buying stocks in January? Like, if that's the case,
it seems like some people shook, right?
Yeah, you would think that everybody was
new to this, right?
I don't know. I thought most people, summer of last year, when we kind of started this channel, I thought already, like, with things being really good, I think a lot of people that would have watched us would have realized I didn't recommend anything. I liked a lot of stuff, but didn't recommend anything because it already looked like we were close to what I thought was probably prosperity. I mean, we've reached it.
We did reach it.
We've seen everything from economic data that came out from the government and independent analysis studies from manufacturing and chain store sales and all this, and mortgages and everything. Everything was great. Interest rates were low. Things were phenomenal, but eventually you start to say, like, okay, like there needs to be a bit of a petering out. And the petering out started to take place. I'm not sure if it wouldn't have took place a little later, like, or a little earlier rather, like say August, when we started to get earnings that were comparable to earlier in the year, and they weren't like super flashy, but we had Bitcoin that was driving insanity.
Oh yeah, for sure.
Like, there was so much insanity in the marketplace. Media, everything was just brought, like, their heads were blowing up.
Oh yeah, definitely.
Going over Bitcoin. So I think it kept a lot of momentum and kept us from this choppiness a little earlier than we probably would have got it. But you would think everybody would have been sitting in some cash by now and saying, like, I'm looking for a good option, but I'm not over committing to anything because things are high, right? S&P 2604 again, down for the week, up 31% over the last 2 years, though, just in case you're wondering about gains or losses. Down 1.4%, down 2.6% year to date. So the S&P's down. But I mean, when you're considering just in perpetuity, things going forward and on as if you've been involved the whole time, the snowball has been gaining size and gathering speed as we drive down this hill. Like, things are not, we understand that we've reached a couple of dead spots, but this is not the end, my friend. Like, don't doom and gloom yourself into a corner.
No, it's not apocalypse.
Just because there's nothing else to talk about, don't get caught up trying to find yourself the biggest problems in the world. That seems to be the big problem here. Is that cowardice or fear is going to drive, and I don't think it's happening. I think it seems like every time we get around almost these numbers, smart money re-enters the market and realizes that things that have pulled 3-4% off in the last week or 10 days or whatever happen to be good buys again, because there are tons of good. So smart money seems to get back in because we've been pretty choppy, but there's been a pretty firm floor ceiling. Like, it hasn't been, and I'm not a tech guy, obviously, we know that. I'm not all charts, but things definitely have been in a range. It's not like, we've been watching the NASDAQ 69.15 at the close this week, play around that 7,000 number. It broke 7,000 a few months back. First time ever it broke 7,000 ever. It's still 69.15.
Yeah.
First time ever it broke 7,000. It's still 69.15. Like,
not far off.
Calm down.
Yeah,
right.
Chill.
We just broke $6,000 last year. Calm down. TSX down as well, 15,207, up 21% over the last 2 years though, so not as comparable to the S&P, up 31% over the last 2 years for people who love that things are choppy and we want to pretend like things are terrible. But the TSX down 1% this week, 6.2% year to date. Things are down. I mean, things are down.
It happens.
They can't always be up.
No.
What do you want? Like, you want, this isn't Narnia.
Too bad, but yeah, it doesn't happen like that.
Yeah, things don't just always go your way. It's not just magical. Like, you have to endure a little bit of this. Like, There's
for sure.
going to be choppy water. Like, you couldn't start any business. You couldn't do anything. You couldn't be in a relationship. Me and you, we have a friendship, all this stuff. You couldn't do any of this without there being some sort of highs and lows and things you have to work through. No matter how contentious it may be or not. And this is of the most minor contentious variety. Let me explain to you. We do not have the ability to look back and have an open mind. We always feel like where we get to, boom, where we are right now, we were entitled to this. We can't look back with any levity and say, like, you know where we were 15 months ago, 28 months ago? Man, we're in a much better spot now than we were. Yeah. We're in a much better spot, and just take that as being peaceful. No, we just like to stir it up.
We do, yeah.
We can't remove ourselves interday from the small fires that look much bigger. When you see the smoke, you think it's burning down, but we just do that interday. We can't help ourselves. True, There's really no major news. There's some political policy that's really more negotiating tactic than anything that's driving things out there. But in the big scheme of things, the market's at a top, and here you go. This is what you get. Carry on, my friend. That's what the markets are doing.
Well, let's talk about commodities. Well, there's not much going on there, but let's talk about it.
Gold a little bit, 1333, oil 62.14. Again, oil playing in that range we talked about. Bitcoin was really, really pulling back this week, was well into 6, closed the week, or whatever you want to call it. It's like trading all the time, right?
Yeah.
When we looked at it like an hour ago, 7,045 US.
So it bumped up a bit.
It bumped up a little bit over the last couple of days or the last day or so. Nothing really...
Nothing that I'm like, yay!
Gold's moving a little bit. I mean, 1333 gold's moving a little bit. I don't know. Is that is that juxtaposed to Bitcoin? Is that what it is? Like, the Bitcoin is down and the other, like...
Other commodities go
the
up.
The other whatever you'd consider store of currency or would be gold, right? So like,
would be.
So is that the correlation there between the Bitcoin going down a little bit and gold going up? So if that is it, Bitcoin had to drop $1,000 or $2,000 to get gold to move $10 or $8. So it's a pretty poor correlation, which just goes to show how much more valuable gold would be than Bitcoin. Nothing. Commodities, nothing. Oil in the range. U.S. We got a U.S. story about supply for oil coming up here a little bit. That's fairly interesting.
Oh yeah, that's right. Yeah,
Go ahead.
Political and financial talking heads have been squawking for the past month about a trade war. Now this isn't a real war. I'm not going to get drafted or anything.
You might.
No? Am I?
You might.
Who am I going to fight for?
You might get drafted into the brainwashing that goes on from listening to too much of this stuff, but we're going to have to cover it because it seems like people need a little bit of a pat on the back and a realization that things are going to be okay. So what's going on basically is not only has the United States issued tariffs around the world, with exemptions, mind you, on steel and aluminum, they went ahead and issued some tariffs solely on the country of China, a major trade partner of the United States, right? These are major economic powerhouses, countries that need each other. Countries in theory, I mean, China buys so much U.S. debt. These countries are so interlocked that the idea that either country wants to see either one fail or suffer is ridiculous. I mean, they're on the same...
It's not logical.
They're maybe not on the same level, but they definitely are economic powerhouses, and there's no reason to want to see either one toppled.
No.
They're doing things relatively right. China is making strides to the right decision-making over and over and over again. And it's issues like these that I like President Trump in power for, is that I think he's going to push this to the negotiating table, and we're going to see a much more open, capitalist China start to reform even more as we settle this with much more level heads prevailing, as opposed to all the people in the news who just... they take the first part of a story, the first 10% before anything's solved, and they make like everything out of it before you get the other 90% that fill things in, and then by the time you look at it at the end, you go like, oh yeah, no, that does make total sense. That's a lot more rational. Isn't that a lot more rational? And like that's what's going on here. So China imposed $3 billion in tariffs on U.S. goods in response to steel and aluminum tariffs. The U.S. imposed like $50 billion in tariffs on China in regards to some stolen intellectual property. Now this is where we get into the part of the reform with the country of China that I think this is going to be somewhat of a catalyst for, which I think ultimately, in the big scheme of everything, and other countries have co-signed the United States, the EU, the entire European Union have co-signed the United States on this. What they want is they want China to fix this one issue. And if China even makes a little bit of a dent in the issue, I'm assuming that a good majority of any kind of like trade negotiations will be a lot simpler. Let's say the U.S. will be a lot more understanding as to bringing in cheaper Chinese goods and service. Well, obviously goods. Right. Yeah. There'll be a lot more understanding. The big issue is intellectual property being stolen by the Chinese. Yes. They're a part of the WTO. Now, China's a part of the World Trade Organization. China's looked at by the WTO, which is laughable, as an emerging country. Right. They're an economic powerhouse. They're not an emerging country. Sure. So they're already getting a lot of slack in certain areas that countries wouldn't be given slack with certain legislation as it is. Things imposed on them because they're looked at as a country that's still on a level that's not on the same playing field as the U.S., which is completely not the truth. We understand that. The issue is they'll take things that they won't pay for, implement them in their own technology, steal them, outright steal them, implement them in their own technology, make that technology at a much lower labor cost, and sell that technology back into the U.S. market much, much cheaper than the people who made and invented and did the research and development on that intellectual property, on that technology initially. And they're not paying the fees that they should be doing. And they've been, and it's not, I say it's not them in a big conspiracy. The entire country is doing this. No, it's
companies or whatever.
It's that there's nothing imposed on people in China by China legislating what the WTO sees as proper trade policy. That's the issue. The issue is that they don't implement any of the laws that the WTO says is the way things go, and they're a part of the WTO. So China as a government needs to get on board with that, and I can tell you that both these countries, they like each other. President Trump, is it Xi or ZXI?
I think it's
the guy, they like each other. These are capitalist countries looking to prosper, man. These guys are working in the right direction. The fact of the matter is China wants to impose on another $50 billion in tariffs in response to the U.S. $50 billion in tariffs on the stolen intellectual property issue, on autos, aerospace, agriculture. So all sorts of
everything.
stuff. We're just everybody's.
They have clone cars out there. I was actually just watching a video recently about how they have clone Apple stores where it's like exactly looks like an Apple store, has Apple products in it. They have like the actual Apple iPhone X, and then they have like the replica. The clone looks exactly like it, just as good, but for obviously a penny of the cost. And it's a rampant thing out there, I guess, in China.
Oh yeah.
It is, yeah.
How is that fair?
Yeah, like you can get a clone Porsche.
But when you start, so let's say things go the opposite way. Let's say our listeners out there are saying like, you're making a lot of good assessments as to why these two countries need to make changes, why China needs to make changes, and why the U.S. needs to stop allowing other countries basically breaking trade law to make money off the back of the United States and U.S. corporations and other corporations around the world that play by the rules.
Sure, definitely.
You're making a good case, Cody. Like, but why do we believe anybody is going to come to the plate and actually do a deal? Good point. Okay, why? Who cares? The fact of the matter is all these tariffs amount to like less than 10% of all goods that are sold back and forth between these two countries. This is not something that's going to end the trade talks between this. This will remain on the table, and they will always be working to try to find a better deal. And as far as I'm concerned, none of this is going to come to fruition. None of these tariffs are in place yet. Some of them might come into play on Monday, we've heard, potentially. but it's so opaque. There's no transparency at all because everybody, I think, is doing more threatening.
Right.
Because I've heard going into Friday that the U.S. was going to propose another $100 billion. But it's still, even that $100 billion that amounts to then $150 billion, not to mention the steel and aluminum tariffs, none of that still equates to even 1% of U.S. GDP. And to be honest, if it's an isolated issue, I just don't see it being that big of a deal in the big scheme of things. Like when you look at it on a percentage basis and not on a numbers basis, and you think about how much money flows through both of these countries and flows through both these countries towards each other, this is really nominal money. Like they're having one of these things out in the public eye. It's happening in front of us. So you're seeing it play out where two pretty barrel-chested leaders are going like, no, you, bro, you back down.
Right,
no, you.
Sure,
and ain't nobody playing. But in reality, both guys are just posturing. It's a lot of peacocking. No one wants this to end poorly. This is far from a trade war as much as it's a lack of news that has caused people to have to make trade war decals to put on their news broadcast, like fancy graphics.
Right.
Trade war 2018.
So do you think this trade war is going to have a negative effect on the NAFTA negotiations that are going on right now?
Again, a lot of mixed news, right? Very opaque, especially for it's the U.S., Canada, and Mexico. So, I mean, you'd think you would get a lot more information, but you just don't. You hear that they want to get it done. U.S. has given Canada and Mexico exemptions on steel and aluminum tariffs till, correct me if I'm wrong, June 1st.
Yeah, it was a very short period.
It's a short term.
I think it was like 6 months or something.
Could be May 1st, but it might be June 1st. They always have the ability to extend it. They're looking to get the NAFTA stuff done by the time we get to that deadline. So they're looking to, as the exemptions expire, have a NAFTA deal done. I know they had meetings in, I can't remember where it was last week. It was off the United States, mainland United States, but all three countries were there, representatives. Apparently what came out was that they're close, but they're trying to agree on a few things like wages, where people are making a certain dollar figure, and if they're not being paid that dollar figure, when a country sells something, they're then having to be tariffed on the fact that certain dollar figures in certain industries aren't being met, like minimum standard dollar figures. So apparently we're hung up a little bit on that, as US wants minimum figures put into people's wages, and then if they're not lived up to, then there's going to be I guess like a penalty on things, and the closer to the actual bottom figure for dollars per hour that employees would be making would remove you then further and further away from being penalized. But I guess we're hung up on really menial stuff. Like, it's really the nuts and bolts of things, is I think what the U.S. wants overall is they want a reorganization of the NAFTA on a percentage basis where they're not giving out so much and getting back so little. I think that's what we both understand, is that the U.S. doesn't understand why they're the number one country in the world, yet they're in a deficit. Quarter over quarter, year over year, whatever it happens to be, trade war, which all of this comes down to Trump doing exactly what he said he was going to do, which was right the wrongs. Now, the stuff in the economy is fine internally. There's work to be done on the infrastructure side. There's work to be done in certain areas, I guess, raising interest rate, finding a nice inflation landing spot, making sure the economy stays sustainable through all of that, making sure as the 30-year and things raise that we don't start really running into a lot of credit defaults. But I think for the majority, the unemployment rates and stuff are at like lows that haven't been seen in decades. So it's not like we're in anything of a bad economic standpoint. When I say we, I mean the United States, obviously, right? Because the majority of our listeners are American. When I say, but they're in a much better standing. They need to go out and enforce some of this stuff internationally and say we're just not. So trade war, international enforcement, as far as I'm concerned, something that's used to bring negotiation to the table between two big boys, and they're going to figure things out. NAFTA, same thing. drag your heels in the mud a little bit. Make sure Canada and Mexico understand that you expect them to be kind of living up to your type of trade agreement, because you're the one that is the asset in this relationship, not the other way around. On a big scheme of things, not trying to be the big dog in the yard, but let people make sure they understand, you know, who brings what to the table and who doesn't. And I think that's fine. Right, and I think that should be a lot more allocated fairly to make sure that the United States is getting their just due, because honestly, you shouldn't have an economy this good and you're still running a deficit that bad. It's a significant deficit that continues to build. Crossed 20 trillion 6 months ago, 21 trillion last month. How much further does it need to go, and how much faster does it need to grow when a country's doing as well as the United States is? Time to turn this around, because you're giving away far too many freebies. There's your trade war conversation.
So you think this NAFTA negotiations or deal is still going to keep dragging out?
No, they're going to get this done.
Yeah, you think they're just going to hammer it out finally?
3 weeks. 3 weeks. It's going to be done. Like they need to get this done. Like there's no, Canada and Mexico don't have a leg to stand on. Like as far as like their negotiating prowess, it's really not there in regards to, like, the United States is ready to play hardball. Look, you can either come closer to the middle and understand that it's a give and take relationship, but if you're always taking and you're not giving, and there's a lot of trade agreements out there that the United States has been a part of where they just feel like they're kind of getting sauced a little bit. It's not working to their advantage when it should be. Because, and I think you can see that in some of the other, you know, that them adding so much oil
kind of got
out
softer
there.
The time they need to toughen up a little bit.
It's strange that the majority of the world kind of looks at the United States as the bad guy. The world, they have a bit of a negative undertone about them.
Yeah, they do. Yeah, for sure.
But then on top of that, the United States does the most for everyone. They do the most for everyone. They cut people the most breaks. They help the most people. Like, they do the most for everyone, yet they're looked at in the worst light anyways. When you're trying to write your own stuff and it's not working and you need to figure your own homeland out before you deal with other people, Trump's the perfect guy to have in charge, because as far as I'm concerned, Trump goes, you know what? You hate us anyways. You hate me anyways. I don't care what you think about me. I don't care what you think about my country. I'm doing things that are right for my people, for my economy, for my businesses, for things going forward. So here's the way we're going to play ball, because I call shots. You don't call near as many shots as I do if you really want to be real about it. And that's being 100% honest. And people don't need to pretend like that ain't the case. U.S., big dog in the yard, they're just pushing you towards negotiation. They're not going to strong arm you into a trade war. You're just going to realize, and I'm sure China already does, that this just means that, you know what? It's time to come to roost, where you need to come, if you want to be a capitalist economy, if you want to be involved in all these good trade opportunities so that you can send your cheaply made goods all around the world, you know, then you need to start honoring intellectual property and making sure that people are not buying fake iPhones.
Exactly.
And that Apple isn't being paid for the technology that they had to pay to get research and development done on.
Yeah.
Seems fair to me.
Seems very fair.
Seems fair to me.
Oh, yeah.
Real simple. Nobody better to do it than Trump. I'm a huge... You're not going to convince me that Trump wasn't the best pick for this. This time, this place, in this world right now, the way he interacts with the media, the way he interacts with the way he's just a gunslinger, and it is, I'm telling you, 20, 30 years from now, people are going to look back and be gobsmacked at how lucky they were that Donald Trump was the president of the United States in these given times when these type of decisions, not the glad-handing decisions, but these tough, critical media decisions where they're going to eat you alive on TV and newspaper, but you're going to have to do it for policy, to set precedent with policy going forward. Trump is the man.
Do you think he'll make another term?
Bow down. Health permitting, why wouldn't he?
Yeah.
Who would compete with him?
I think so too.
Who would compete with him? Yeah. By the time we get to the end of this first term, there's not going to be anyone that's going to, like, Bush came out of the wave of the, you know, the war and stuff, and, you know, they took out Saddam. This is going to be strictly on turning this ship around economically, bringing a powerhouse that's supposed to be a powerhouse back to where it can show that it runs a surplus, that it really is this powerhouse on paper.
Right.
Everything is righted. The accounting is righted. That's what I'm looking to see. Trump is a businessman who's looking to see the very same thing. The prosperity of the U.S. in the 1950s, coming out of World War II, right? Real prosperity. Granted, it may be that apple in your eye type of prosperity, looking back, rose-colored glasses, but it's there tangibly because not everybody runs a deficit, and the world's biggest economic powerhouse definitely shouldn't. So, yeah, negotiating,
once again, right?
Strong arm by the Trump.
Strong arm by the
China.
Trump.
Who would have picked this 10 years ago? Who would have said the guy that says you're fired on TV would be strong-arming the Chinese into tariffs, into what's going to end up being negotiating on a lot of topics that they really need to get righted. So, that's NAFTA, trade war. That was that, eh?
That was that.
That was that. That's the big news that's making everybody all hostile, that they say is making the markets all hostile. Right. I think that's just what's spending the time. It took us a lot of time.
Oh, it did.
We covered everything.
Oh, yeah. So what else is going on with the economy, Cody?
What else? U.S. added 241,000 jobs in March. Estimates were for 185,000. Unemployment stays the same at 4.1%. That's a 17-year low, my friend. Low unemployment, added jobs to the job market. We've seen that wages, like dollar per hour, were up again.
That's right. Yep.
Things are going well in the U.S. You know, it's just people can't be happy when things are good. Just let it glow on you. Bask in it, life. It's summertime. Walk outside into the land of the free, the home of the brave. You live in the greatest country in the greatest times ever.
And while it's great, remember to save.
Hey, no beamers all around.
No.
But inside, with your ability to do anything and be anything and prosper and change jobs and change locations and just go and live the American dream. The American dream is alive and well right now in the United States of America. Do not let people sell you anything different than that. If you wanted to pursue the American dream, if you were an entrepreneur who said, I'm going to put in 18 hours a day and I'm going to grind this out and I'm going to make this work, you know what? This America is the most inviting to those type of people of any America, maybe of all time.
Right. Sure.
You tell me that isn't a reason to walk outside into the sunshine and just kind of bask in it and just say, you know what? Opportunity is available to me if I want to go out and take it. And there's a lot of people that chomp at the bit in life to take up opportunity. And for those people, they're not listening to all the nonsense. They're looking at numbers that say that the unemployment rate is at the lowest it's been in 17 years, and that wages continue to go up, which means wages are competitive in the marketplace.
Yeah, that's right.
Things are doing and we haven't seen any kind of drastic increases, inflation or anything. Things seem under control. Interest rates slowly bumping up. Things are doing well. I love it. A trade war is great. Hot button issue around the water cooler. I walk into work and that's what people hit me with. They hit me with markets down and trade war. And I go back and forth with that. But in the back of my mind, I know the 50 next statistics tell me that things are all pretty gravy.
Yeah.
And that we're not doing near as bad
as people think,
as a bunch of saddy pants on TV might have you believe. Right. Canada added 32,000 jobs in March. Unemployment 5.8%. That remains steady as well. Still very low unemployment numbers here in Canada. GDP estimates in the U.S. down to 2.3% versus 2.8% last week. Fed Chair Jerome Powell, the new Fed Chair, already had a rate hike, spoke in Chicago and reaffirmed intentions of the Federal Reserve raising rates. But again, he's reaffirming something we already know. Yeah. There's a couple more rate hikes on the calendar for sure, and that it's all pertaining to if things go well. We're not just going to raise rates for the sake of rate raising. Like, rates do need to go up. Historically low, still, it's time to go up. But he's not a lunatic. He's telling you what you already know. Yeah, exactly. He's not just saying, we're going to raise rates. We don't care. We're raising rates at an exponential rate.
Madness out here.
Yeah, rates are going up no matter what. 10%, 20%, right? He's not doing that. Rates are going to go up 0.25%, couple more times. It's what we expect. So he's reaffirming what we expect, but it's news because people get scared. They hear it.
Every time they hear it,
They hear rate hike. And
oh my God.
Oh my God. It doesn't matter that we already knew that. Construction spending in February up 0.1% versus a 0.5% estimate. Not very good, missing the estimate, but up 4.4% year over year. Red Book chain store sales up 4.4% year over year versus 3.6% last week. MBA mortgage applications, a composite index down 3.3% versus 4.8% last week. Purchase index down 2% versus 3% last week. Refinance index down 5% versus up 7% last week. Everything down versus up last week when it comes to mortgage applications. 30-year unchanged. 4.69, man, 30 or 4.69. That got up there quick.
It did, yeah.
People don't talk about that near as much as the rate hikes from the Fed, but that's, I mean, everybody's got a mortgage.
Yeah.
Everybody has a mortgage, and you're going to refinance at one point in time or another, right? And like we've noticed this go up like a good 0.5% as well.
Yeah, we do follow that all the time, right? So.
Yeah, I look at it. I mean, it's huge.
Yeah.
Everybody owns a home. It's the biggest purchase you're going to make, and you're going to.
Oh, for the majority of people out there, it is the biggest purchase you're ever going to make.
Yeah, so it's a giant economic indicator, right? Like a good. Let's face it. Drink of water while we face it. The 30-year is letting people know basically the majority of people that are purchasing homes, which are going to be families and people that are pretty well-to-do. Rental is a lot to do with either certain areas that you live in, certain cities where rental's a lot more prominent because of the way housing is set up in those cities, which are very small compared to cities where you can buy homes. So you're very much, or people are not making the money to actually purchase a home, which in the United States, when we're looking at these numbers, that's, there's a lot of people able to afford homes right now. Let's put it that way. Let's put it that way. This number is very, very important, I think, because it covers such a wide array of the populace, because almost everyone under the age of 65 or 60 and over the age of 25 or 28 has a mortgage.
Yeah.
Very good way of encompassing everyone into a pot and looking at what will be most likely the largest purchase all of those people ever make. And if they make a larger purchase, it will just be them buying a bigger home with a bigger mortgage. None of it will be them buying a $300,000 home and then $1 billion Dreamliner. No. Right? So it's always going. So it's a great indicator. The mortgage apps, I'm telling you, we've got good earnings from the housing sector. Housing sector's good.
Yeah, we have.
But they're getting punished because this mortgage rate continues to climb, and we've seen the housing sector for weeks getting beat up. And even though this is stagnant now at 4.69 unchanged on the week, everything down compared to last week, everything up. So people aren't going to buy new homes as prices continue to climb. Like, you're going to have to probably refinance a lot of the time. But when you're talking about the purchase index, how many people are really going to be making commitments right now, unless you know you have to make a commitment in the very near future? Like, you have to make a commitment, and you're under the impression, which I'm under the impression, and everyone's under the impression, that rates are inevitably going to go even higher than this, and you need to commit now. So it's, mortgages, man, that's going to be a tough one. Yeah. When things were historically super cheap, I mean, you're going to buy, people are buying houses left, right, and center, right? You can spare the money to buy that house because you can make the payment when the percentage that you're paying in interest is such a nominal nothing. But as this creeps, we'll see. We'll see what happens. This is the defaults I was talking about. There's not a lot of defaults out there right now. Lending has been a lot tighter.
This could be the start of it, though.
Lending's been a lot tighter than subprime mortgage years. Back then, man, they were giving out houses to just anybody. Yeah. So the lending has still been tighter, even though your interest rate's been lower and everybody's payments are going to go up. Like, in the next coming years, they are going to go up. They still, when they got those mortgages, they were still a lot tighter with giving the mortgages out to people who were a lot more qualified. So they've added in a much nicer buffer zone from when they qualified for those mortgage in case those interest rates went up, as opposed to 2007 when subprime mortgage crisis, when there were so many people on the hook for houses that were paying into a house on a line of credit where the line of credit payment was $800 or $900 a month, but they were only paying $600, and that was okay. They weren't even able to make the payment at the lowest rate, but it was okay. But it was way shady lending practices that are no longer in effect.
That's good.
No longer in effect. U.S. oil exports. This was a number that I thought was pretty interesting. In March, were the highest levels ever at 2.175 million barrels of oil a day as the United States becomes one of, if not the world's largest oil producer. 2.175 million barrels.
That's a lot.
They make more oil, export more oil than the biggest oil exporters in the world now. The United States at one point was significantly oil dependent. Like there were big sections with some oil, Gulf of Mexico, Pennsylvania, Texas. There were, but with fracking now, the Permian Basin and there's so much opportunity for the United States to. I mean, they almost don't have a reason to want companies like Tesla.
No, why would you?
You really hurt GDP when you talk about just how much money is involved in the United States being the #1 oil exporter in the world.
That's right.
They were oil dependent. We were under the impression a decade ago that we had passed peak oil on the earth.
That's very true.
And the technology of fracking and the way that we've seen fracking boom in the United States, I mean, it's pretty unreal, and it can't be discounted how much the United States' lack of oil dependence in their recovery in the last decade didn't aid that recovery so significantly. The fact that their oil dependence just was nowhere near the levels that they were. So while they were coming through an economic recovery, they were also, booming into an industry that was giving them a lot more leverage. Because, I mean, honestly, when you talk about the oil trade in the world, biggest trade in the world, maybe?
Probably,
as individual trade. Like we're not talking all crops. We're talking one individual anything.
Probably oil,
right?
I'm going to put my money on oil.
So when you go from dependent to independent to the market leader in exporting, and you're coming through what was a recession into what is now, the Goldilocks zone. You're living in the Goldilocks zone.
For sure.
These numbers stand out significantly and just go to show how much more dominant the U.S. has become on a world scale in so many areas. They weren't dominant before. They weren't on these lists not even close. No. It's time to get that deficit turned around, buddy.
Sure.
Seriously, how are you in a deficit still? It's time to get the deficit turned around. There is no way I wouldn't want Trump to run a second term if he doesn't go through all this stuff and then turn this deficit around.
Right.
And really prove to everybody that all this kicking up dust is going to amount to something, because everything's good. Everything's so good. Let's see it happen. That is the markets. That was only 50 minutes.
That wasn't too bad. No.
We're just chatting. We missed a week. I missed you. Yeah.
Missed you too.
Yeah. We're having a good conversation.
Well, we got some headlines to talk about here. So, Boeing continues to dominate the world. In their sector anyway.
Yeah, absolutely. So they're down on the week, $326.12 to close the week. Down because obviously tariffs on aerospace products from China gives everybody a little rattling. But as we're talking about let's talk about a little business. Forget about potential tariffs that aren't even in place yet, that are just a bunch of chit chat. Right. Let's talk about real business. Boeing sells an order of 47 787 Dreamliners to American Airlines for $12.3 billion. And American Airlines drops an order for 22 Airbus A350s. So another ting over for Boeing's side, and a punch in the guts for Airbus as they continue to try to make headway into the U.S. market. But Boeing continues to snuff that out. But wait. 75 737 MAXs to Jet Airways for $8.8 billion. And just in case you weren't sick and tired of Boeing selling everything despite a backlog of 50 billion planes at this point, BOC Aviation, they are Asia's second biggest aircraft leaser, buying 6 787-9s for $1.7 billion. So this week, in a week where Boeing was down because some tariffs on some aerospace products in China, Boeing sold a few dollars worth of airplanes around the world, as everybody knows that they're the best. And I don't really foresee any of the tariff thing rattling the cage over. I'm amazed they didn't come out with a statement talking some smack. That's kind of like that. Like, you want to tariff our planes, eh?
Check
like,
this out.
Right?
Yeah.
Like, that's kind of their style. So, Boeing sealing up deals all over the world. Major deals, taking over deals from Airbus in the U.S. and abroad. The stock down. It's been up so much, running the dial. It's unbelievable, the Boeing stock and how it's been on. But I don't know how it wasn't up there to begin with, because it's an amazing company that has no competition.
Sure,
there's no competition.
No.
What do you want me to tell you? You think Lockheed Martin or Airbus, just because Airbus sold more planes last year, you think they're the real competition for Boeing? There's no competition for Boeing. Bombardier, there's no competition for Boeing. This is one of the biggest sectors in the world in dollar value. There's no competition for this one company.
No.
It's right. Like, how do you not love Boeing? They dominate. They
always
dominate.
So Mark Zuckerberg has a meeting with Congress next week to address the Facebook security concerns.
Yeah, he's gonna wear a suit and tie. I heard he's not gonna.
Apparently, not his
not the
shirt
same
and
shirt and idea, right? Like. So Cambridge Analytica scandal, apparently 87 million users, not 50 million, were potentially affected as some data was taken by this company that they got access to through working with Facebook, gathered this data. Apparently this data potentially could have got sold off to malicious people, whatever, Mark Zuckerberg agreed to speak in front of Congress, like you were saying. CubeU, another company that just this weekend here was suspended after CNBC brought up to Facebook the fact that CubeU was also selling user data despite being listed as a for-nonprofit academic research company. They're one of those companies that go like, how much do you look like Brad Pitt, or how much do I look like Brad Pitt? You know those silly surveys. This is where people are getting their data jacked. You're getting your stuff jacked because you're allowing these people to have access to your data because you click yes because you want to know, like, on a scale of 1 to 10, how cute am I? And, it's best to just like deny your mirror and eat what's in the fridge and tell everyone you're a 10. And don't click yes on giving out your data.
Yeah.
Just, you're a 10. Just live as a 10. Stop, stop needing confirmation from Facebook data gathering companies, because that's ultimately what's going to happen.
Yeah, that's shady.
You partake in this kind of stuff, and you want to know who your favorite character from the Goonies is, and you take some little survey deal. What character from the Goonies are you most like? You take that survey, and then I've probably taken a few of those wrestling wise.
Right.
Yeah. What wrestler are you?
Now you say that, I've probably taken a couple too. Now.
Darn, or horror movie ones.
Yeah.
My dad has probably been stolen.
Yeah.
Stolen dad.
There's only like 1% of people will get all these right or something like that.
I've taken those.
I have.
I've taken those, and then bragged when I got it right. Bragged. Yeah. Like really. Like braggadocious about it. Absolutely. So, CubeU, another company selling this. So they're getting the boot from Facebook, we hear this weekend. Cambridge Analytica. Who knows how this all plays out? Zuckerberg took a little bit of personal responsibility for this. He's going to go in front of Congress. He's going to tell Congress what they want to hear, that they've been working on this. You look back in the media, we've seen Facebook's been working on security as far as advertising, all this stuff for a long time now. Some of this stuff's been sneaking, especially recently, a lot of this stuff's been sneaking through. You can't blame Zuckerberg or Facebook. Like, he came out and even said, this is a new company in a new space that's the absolute front runner. You're going to encounter a couple of issues that nobody really could foresee. Sure, yeah. And I mean, you can kind of somewhat foresee people using people's personal data maliciously, but at some point in time, there's like this there's this trust line that you allow people to cross to do business with you, where they're supposed to uphold their end of things too. Obviously, this company wasn't doing their job.
Yeah.
How that falls on the feet of Facebook to do the most extensive background research on everyone to make sure everyone is as squeaky clean as humanly possible seems quite daunting, because it only takes one rotten apple to spoil the bunch, right? Someone with access to things could be really ruining things. So, I don't know. Tim Cook from Apple came out early in the week and says, how would he handle things if he was Facebook? He said he wouldn't. Apple sells products to users, not users to advertisers. Shots fired.
Drop the mic.
Yeah, that's shots fired from Tim Cook. Zuckerberg came out and responded, but just kind of said, like, Tim doesn't understand what's really, but that's, there was nothing you could say, because Tim Cook, like, with 2 sentences there, was just like, you know what?
Here you go.
Yeah.
Like that.
My big concern, Facebook, $185 a share down to $155 in the last month. That's scary to me, because I think the thing we're worried about, more so than Cambridge Analytica scandals or Zuckerberg going to Congress or Tim Cook laying a beat down verbally on Facebook and Zuckerberg, is that the user statistics have been down in the 3 major categories where you need people to grow generationally, which is people basically under the age of 30, 28. It's been those people that have been down user-wise. It's the first time they've been down ever before, and they've been down recently. And I think the big issue is that once everybody gets into a place where everybody's mom is, it stops being really cool to be there. And now you don't really want to hang out anymore. And you're trying to convince a 14-year-old that something that's really old hat to a 14-year-old, been around since they've even known what things are. It's not really appealing. It seems kind of like the old news. It's old news.
For old people now.
A little bit, right? My big concern is not that Facebook's overpriced, because it's not. You look at Facebook and a price to earnings and stuff, Facebook's actually looks really good. But Facebook, get your coughs out. Little, we've got like malaria now going around here or something, right?
Patient zero.
Yeah, absolutely. See, you heard it here first, folks. This is how we all went down.
So do you think Facebook might go the way of like a MySpace then?
No. I think they're going to adapt with the times and figure things out, but I definitely think it's going to pare back a little bit. My big concern, again, is the user statistics, way more than these little bit of scandals that come out from every company that has user data. PlayStation, Equifax, it doesn't matter, has user data breaches. Uber. It's people are trying to breach this data. There's corrupt people out in the world that are trying to find every porthole to get access to things. And with people out there as actively trying to do that, find any kind of weakness in a system, you're going to end up having that. So how do you lay it at the feet of Facebook when we know, investors know, the shareholders know, the marketplace knows, we've seen enough news reports. Facebook is actively working on security on all levels over there, because they are abundantly concerned with their image, right? They want to be the most squeaky clean platform, which is why all the young kids are going to leave, because they want to be super squeaky clean, and nobody wants to be a part of that, because that's no fun. That's not rock and roll. That's not rock and roll. Carry on.
Here we go. Toshiba apparently is not playing nice with Bane Capital. Apparently they don't want to sell their chip unit.
Oh, no. It's not that they don't want to sell it.
Oh, okay? My bad.
They've had a lot of issues trying to sell this. This consortium with Bane Capital, there's a lot of big tech companies involved in this consortium. So if you're getting into this news story goes a lot deeper than what we're going to get into, because we've covered this before. You go back and take a look at this on some videos we've done. But so just the recent news is Toshiba needs to sell this. Debt reasons why. They're selling their chip unit. Now, Toshiba Memory is the world's second largest producer of NAND flash memory in the world. Now, we know how big that market is. Between DRAM and NAND, we know how big these markets are and what the semiconductor industries have done in the last couple of years. Now, they've cooled off significantly this year. But Toshiba needed to sell this unit. Now, this was being back and forth between Western Digital, remember?
Yes,
and Bane Capital, right? And so Western Digital was saying, because of a purchase of SanDisk, that they had some rights to some of the intellectual property that Toshiba had inside this. They weren't able to legally sell this without the go-ahead from Western Digital. That obviously didn't come to any type of fruition. Bain Capital had an agreement to purchase this chip unit from Toshiba for $40 billion. Now, This deadline to make this purchase was March 31st. Now it passed. Now they've agreed on this. But now there's no problem there. They agreed on the purchase. But because the deadline passed on the 31st of March and Chinese regulators haven't approved the deal yet, this allows either party to back out of the deal without suffering any type of financial penalty. Because you have to, when you make these big agreements, tie in a little bit of money that says if you just back out for the heck of it in the middle of things, you got to pay people a breakup fee for this. Like, it was a waste of my time, you know what I mean? But either side can pull out. Toshiba, on their end, had Hong Kong-based activist investment fund Argyle Street Management persuading them. Now, they're persuading them actively right now, Toshiba, to seek a higher price, saying that outside estimates have their chip unit being worth potentially double the $40 billion selling price that they've agreed to with Bane Capital. No penalty for pulling out because the expiration date on the agreement, March 31st, has passed. But my question is, isn't Toshiba, don't they need to sell this? Wasn't that the big thing before? Didn't this need to get done by spring?
Didn't he just say
Didn't this need to get done? Well, this is another company. Toshiba hasn't come out and said they're backing off this deal with Bane at all.
No.
This is a separate company looking for a cut.
Right.
They're basically telling Toshiba, hey, we can go find someone that'll give you a better deal, or we can find someone that'll find someone that'll give you a better deal, or make Bane up their deal, you know, and get a cut. But didn't Toshiba need the scratch? Wasn't that the whole deal with them selling this chip unit, that Toshiba needed the dough? That's what they've been saying the whole time. They needed to get this done by spring. They needed to have this finished because they needed to secure some cash for debt that they had that was outstanding, things that were coming due. Apparently, they can just drag their feet forever. I guess they haven't said anything.
Right.
They haven't said anything. So we'll say that they haven't said anything. But if they do, it's so funny how sometimes deadlines on like Wall Street aren't like real deadlines.
No,
everything
no.
like the deadline, like the Department of Justice, AT&T, Time Warner deadlines.
It's kind of like guidelines.
It's kind of, it's a date. Like they give you a date, but it's
you want to be done by then.
Sometimes it's we can extrapolate on the date a little bit. Yeah.
Well, is there any other headlines?
There is.
Yeah?
Deutsche Bank.
Oh, yeah.
Deutsche Bank is in the crapper. They have been for years. Deutsche Bank hired a new CEO, Christian Suing. He's been on the management board since 2015. He's been at the bank working in a bunch of different venues all across the world. Singapore, Toronto, London, working in all sorts of research, analysis, all sorts of stuff. He's the new CEO. He's been there since '89. Now, shares are down 27% at Deutsche Bank in the last year to $13.87. 5 years ago, this bank traded at well over $50 a share. Former CEO John Cryan hasn't been able to get this bank past its struggles, man. It's been having a tough time. He was appointed as CEO in 2015. It's just been getting worse and worse. Deutsche Bank is trying to figure things out. This is a big move. New CEO. It had to happen because a bank that used to be one of the big ones is struggling significantly. They've already ate it in the public eye. Like, you don't even get media. We don't know if we've ever covered Deutsche Bank. 5 years ago, 8 years ago, I would have recommended Deutsche Bank to people. I can physically remember myself recommending Deutsche Bank to people. Right now, you wouldn't even discuss Deutsche Bank. I figured this was in the news. Maybe this is the turning point. Used to be a heavy hitter. Deutsche Bank making the CEO change with a guy who's been with the company since '89.
That's exactly.
He knows the company, right? Yeah. This guy's got to know it. Been on the board a few years.
29 years, going on 30.
He knows what's up, right? Let's believe that this guy's going to be able to get Deutsche Bank to figure things out. They were a strong bank. They were really strong. Let's talk about some cars. Ford, March sales up 3.4% versus 2.8% estimates. Passenger cars down 8.1%, as we know. Ford not doing great on passenger cars. Last year, remember, they closed some plants down. They gave like little three-week moratoriums on building all around North America and stuff with plants because passenger cars just don't sell as good at Ford as they used to. But SUVs up 7.5%, trucks up 6.7% because those things at Ford do sell. They're the best selling stuff in North America as far as SUVs and trucks go. Ford. Year-to-date U.S. sales down 2.9% overall. But on the flip side, their biggest contender, their biggest counterpart when it comes to sales in North America, the heavyweight, the big guy, the Japanese automaker, Toyota. March sales up 3.5% versus 4.9 estimate. But that's a pretty big estimate. They were expecting Toyota to really knock it out of the ballpark. Trucks up 13.9%, SUVs up 17.5%, Toyota brand up 4.5%, Lexus down 3.2%. But when you look at that trucks and SUVs, there's money to go around. Cars, we didn't get the stat, but I would imagine cars probably didn't hit their mark, hence them missing the estimate. But trucks, SUVs with Ford, trucks, SUVs with Toyota, trucks and SUVs when people can afford it, when oil's still $62 a barrel, despite the fact that at the pump it's a little bit higher than what you'd think $62 a barrel represents. It is a little higher, but when there's money to go around and interest rates are still low, people can finance things cheap, they buy SUVs and trucks. These two companies are the big ones. I don't think anything in the auto industry necessarily priced out of the market, but if you're looking at ones, definitely the best of breed. Ford and Toyota, year-to-date sales for Toyota up 7.4% in the United States. Tesla, let's talk about another car company, not a tech company.
No.
Pump your brakes. This is a car company.
It is.
Forget your technology. Tesla, they've got debt due.
Oh, they do.
It's coming up. There's going to be debt. We're going to talk about this.
We are.
This is going to be that Thursday thing. There's debt due.
There is.
They purchased a company that his cousins owned, and that debt is due. And that debt needs to be paid. He said he'd pay it out of his own pocket. That's what he said back then. Yeah, this company's continuing to make no money. Solar City. The Tesla stuff, some of the Tesla solar panels are being sold in the Home Depots now. They got that open.
Oh, do they?
Yeah, where they've actually got the Tesla rep in there demonstrating the stuff. I heard some of those were actually open now. Tesla's doing a 4-wheel drive Model 3.
No, all-wheel drive, yeah.
All-wheel drive, yeah.
All three. They can't even pump with the first ones they got going.
Yeah, they got another one in the works already.
Another one, yeah.
They got to keep wowing people because they're going to keep asking for cash.
Oh, for sure.
Right? They got to keep going to the public markets begging hat in hand, like, yo, bro, we need some scraps.
You got this coming.
Look at this stuff coming. We can't make anything, but we've got a nice backlog and everybody likes our stuff. We're making new things.
We do have orders. We just can't fulfill them. Right?
How much time do you think he spends on SpaceX compared to Tesla? Do you think he's
probably, I'm going to say 80% SpaceX, probably 20% Tesla.
He's not all in, I don't think.
No.
He does a lot of the media stuff.
Yeah, he likes the
pomp and circumstance.
Yeah, for sure. Yeah, but I think
he's a habitual overpromiser and underdeliverer.
Yeah,
we've seen that.
Yeah.
I like Musk.
So do I. Yeah, he's a smart cookie.
Don't let my character deconstruction of him make you think that I don't actually think the guy's intelligent. I think he's ridiculously intelligent. I think he does most things right. I just wonder how much his mind has wandered from the actual point where Tesla has shareholders. That's my issue. It's not just his personal money. There's debt out there. The debt already that's out
definitely
there.
has people to answer to.
25 paying 7.1%.
Yep.
The last debt issued. They got crap credit.
B
rating at Moody's, double B I think at S&P or whatever it is. It's garbage. Maybe the next rating might be convertible debt. They might have to actually put out convertible debt, which converts into shares if people want to do it. That could be that could introduce a lot of shares to the marketplace and really dilute things.
No, definitely could.
Tesla came out with some production numbers for Q1, my friend. 34,494 vehicles in Q1 were made. 9,000 of those, 766, were Model 3s. Deliveries were 29,980. 8,180 of those were Model 3s. They said the Model 3 production continues to pick up, doubling week over week. It's picking up. It's a good car.
It is, apparently.
They're
people like Tesla.
They don't sell cars near at the level that other car companies do, and they sure have an astronomical amount of debt without any of the production facilities.
Yeah.
They don't have any of the actual infrastructure built. They don't have any of the inroads in all the international countries that a company like Ford or Toyota have, or GM or anybody else.
Right, yep.
They don't have any of that stuff on the go. They don't have the service stations to fill their vehicles. They have a very inflated stock price. It's been getting the bejesus beat out of it for the last couple of months. I know I'm going to be on the opposite side of this discussion on Thursday with you, and I'm going to make some good points for Tesla. But I can tell you, as Cody sitting here, and not Cody playing off your character Thursday, I'm terrified as an investor at Tesla.
Oh, yeah, no, yeah.
I look at it strictly as a car company, not as a tech company, with no infrastructure, lots of debt, nowhere near the competitive abilities to compete even on the lowest level with a Hyundai, let alone with like on just a sales side alone, right? What do they do? Where does the money come from? Like, and I know the points I'm gonna make on Thursday. I don't know. You want me to make some points here of where the money maybe comes from?
I think you should save them.
Save them.
Save them.
Let's just save money.
Because I've got some good points.
Let's just say things.
Okay.
Things at Tesla will never fail unless people feel that that technology is so readily available for cheaper than what that debt's worth taking on in another way. And Tesla will be purchased, and it will be purchased no matter what the share price falls to. It would be purchased at a premium by tons of companies that have capital all over the place. Would shareholders reap anything from that? No, because by then Tesla will have so much debt outstanding that it'll be all the debt holders that get any money back first, and shareholders won't get a lick of anything. Probably, but it won't be a company that fails.
Well, I don't think the tech itself that the company puts out.
The company, the brand won't.
The brand will fail. I think the implementation of the technology will fail.
You don't think that's ever going to become the way things work, eh?
Not in the near future.
You think we live in a petro world
For still? Right now, petrol makes the world go round. Yes, definitely. Maybe 50 to 100 years from now, maybe we'll all have electric cars. But I think
we're not going to go grandfather in hundreds of thousands of service stations with new infrastructure. I just don't see it happening. I don't see a need for it. Especially as the country you're trying to get this idea to take off in. Because let's face it, at the original outset of this idea was a solar idea. It was an energy idea. It wasn't a who can make the coolest car idea. It's become that because I think they realize that with the United States becoming oil independent and the biggest exporter in the world, that oil ain't going nowhere.
No, not for a long,
They're going to have to embrace the fact that nobody is going to go out of their way to change the world to help Tesla along. They're not just going to cater to them.
Definitely.
The world is going to be Ford and Toyota, and Tesla can hope to hang on, but the brand is worth something. So I think unless they tarnish the brand something significantly, as far as your parents or my parents or most people walking around, the Tesla brand still has quite a bit of cash.
Oh, for sure. Yeah. Tesla will be the first car on Mars. I'm pretty sure. I'm 100% positive.
It has quite a bit of cachet, that's for sure.
For sure, yeah.
Amazon, Alexa, and the smart speaker could be adding a person-to-person payment option in the near future. So when your guy comes by and you gotta pick up, you could be like, hey, thanks, here Alexa will pay you on your. So CEO Bezos, well, we've talked about Bezos in the past and all the stuff that Bezos does, and who knows what this person-to-person payment option is gonna. I mean,
is it gonna be like a Square type of thing going on, or what? Because that's basically
there'll be some banking regulations that come in with this now if they start taking payments like that. So they're gonna have to definitely get some of the banking legislation that's gonna have to be implemented there, and
so no paper trail buys pretty much.
It's gonna be all paper trail. You're not gonna be able to make any phone calls of any kind of
you don't want to make those deals.
Don't make any And that's the reason why we're getting away from paper money to begin with, is to try to minimize what cryptocurrency likes to glamorize, which is the ability to make purchases off the grid. We want to get rid of that so that you can't be out there selling God knows what to
And that's why there's rules and regulations set in place, and it's monitored.
And that's a good reason for that. But obviously Amazon, they're going to get into it. I mean, we understand that. They get into everything. So the idea that they're not going to get into this, but it's going to be heavily regulated. Heavily regulated, right? Like everything else Amazon does. CEO Jeff Bezos, he personally owns the Washington Post. That's a anti-Trump newspaper. They don't report a lot of things that they like about the Republican Party. Now, Bezos doesn't own the Washington Post under Amazon specifically. He owns it personally. We've seen Trump talk a lot of smack about Amazon recently. There's just been some talk in the media about how much of that might be just in relation to the fact that
he said he's going after him for taxes or something like that.
Yeah, he doesn't like the fact that the USPS, United States Postal Service, which is a struggling company with pensions they don't have funded and all sorts of stuff, gives a lot of gratuities, I guess you'd call it, or concessions to Amazon for shipping and lose a lot of money with that. So he came out in the public and said he doesn't think Amazon pays the USPS a fair rate. That was earlier in the week, and Amazon took a bit of a hit from that. But I mean, they're way priced high. They can move around on basically anything and have been recently anyways, despite the fact that they've had nothing but good news and new markets they happen to be entering into over and over again. But we wonder how much, and that's one of the few things I heard on the news this week where people talked about it, and I wondered, there might actually be some validity to that. I wonder how much of it is just the personal thing where, Bezos' Washington Post takes some jabs at Trump.
Right.
So Trump takes some jabs at Amazon. Yeah. And nothing really is going to be made of it too much other than, just a little jousting between two heavyweights. Bezos basically through the anonymity of the Washington Post, but probably still, I would imagine you would hire people that have your ideals in mind. When you have that kind of money and then you have that kind of reach.
When you own the media.
You want to get your rhetoric out there, you would
imagine.
Right? Right? So we wonder how much of that is involved in the...
You don't buy the Washington Post for no reason, right?
Yeah. So Amazon and Trump continue to go back and forth, but when Trump says that the USPS doesn't get a fair rate, I wonder, why don't they just charge them more? That's what I was thinking. Why don't they just charge them a little more? Have they agreed?
It can't be that easy though, right?
They said they're giving them concessions. That's what Trump said.
Well, then take away
there was nothing in there that said they were locked into agreements.
Then charge them more,
there was business agreements that were having them handcuffed for the next decade. It just sounded like they were giving them some handouts. So cut back on the handouts. That to me seemed really blatant. I don't know. Bill Ackman. You know who Bill Ackman is? Activist investor. Does a lot of stuff.
Okay.
Herbalife, shorted Herbalife a few years ago. Big deal. Runs a company called Pershing Square Capital. They're actually the guys that shorted Herbalife. He's been the CEO of CP Rail. Has been invested in Procter and Gamble. They've been invested in a lot of stuff. Very, very active. They're the ones that in 2007 got Wendy's. Wendy's used to own Tim Hortons. They got Wendy's to spin off Tim Hortons to its own company. Tim Hortons took off, went crazy. Wendy's crashed. Yeah, so they're those guys. That was Ackman that got Wendy's to do that. So he's been losing some money because they've been making some poor investments over there. Investments he's sticking with. 8.2 billion assets under management right now over at Pershing Square Capital was 20 billion 3 years ago. So they've lost 50%, a little over 50%. BlackRock and JP Morgan, some of the biggest touters of Ackman and Pershing Square, they don't send clients over there anymore. They think, I guess he's gone a little rogue. They just feel he's so entrenched in his beliefs, but he's good at what he does. He's got a track record of a lot of deals where he really ruffles people's feathers. He is someone who's very polarizing, but...
You think he's kind of gone off the deep end, though?
I don't know. I like Ackman. When I hear Ackman talk, he's smooth. Unless he's kooky upstairs, he sounds like he knows what he's doing.
Well,
he sounds like he might just see things different than other people, which is usually a lot of the time for people who get things done. Yeah. I think that's people who get things done. Do you think Zuckerberg sees things the same way as people?
No, I think
most Trump sees things the same way as people? Yeah,
I think you have to be.
Very few people are going to come off like Buffett, like your grandfather, and seem very warm and inviting, despite being the most cunning individual in the world.
Who knows if that's just the way he is in the public eye?
Just the demeanor,
who knows the way he is in his personal thing, right?
Yeah, might be very entrenched in what he does.
For sure, right? Yeah.
So, Ackman, I don't know, every time I've seen him give interviews, he seems very methodical. He seems like he could be the guy from American Psycho.
I was going to say that, yeah.
But he also seems very calculated and very well-read. And he understands what he's saying, and he understands the points people make against what he believes, but he has already thought them through. You could tell the guy's rarely caught off guard about an opinion that he has, which I find to be a really strong quality of someone who might be just an outlier. And these deals might actually turn out, but 8.2 billion assets under management now, 20 billion 3 years ago. BlackRock, JP, no more referrals to their clients to go over to Pershing Square. Some of the big purchases they've made recently that they hold on to that's losing some money: Mondelez, Chipotle, restaurant brands. Big losses in Valiant Pharmaceuticals. They're holding big percentages of companies that aren't doing very well. Ackman needs to get things straightened out
Oh, it sounds like it. Definitely does sound like it.
Because Pershing Square is losing money. The only thing that's really saving them is Pershing Square has some sort of like investor rule where you can only take out 1/8 of your money every year or something like that.
Oh, really? Okay.
When you get invested with them. So it's a hedge fund or whatever you want to call it, right? It's a big investment firm.
Right.
So they've got all sorts of how much money you had to have coming in, how much money you make every year. There's a whole bunch of red tape to even be able to be involved, to be invested. So there's a bunch of red tape to get out as well. So people can at least dump all the Pershing Square assets under management right away. They can't just leave immediately. You know what I mean?
Right.
So he's either going to right this ship in the next little bit with either getting rid of some of these assets that people obviously don't like that are underperforming significantly, which he doesn't seem like someone who really cuts bait and runs very often, or he's going to have to hope that some of these companies, some of which he's on the board for, are going to turn this stuff around.
Oh, yeah. Sure,
people are going to continue to trickle money out of there until Pershing Square becomes somewhat of a laughing stock, which at one point in time...
That's like the only way to get out is you got to trickle your money or just take...
Yeah, every eighth... You can take an eighth out every quarter, I believe is what it is. Ackman used to be all over the news and stuff. He used to be CNBC all the time. I'd hate to see him go away as a guy who just got a little too aggressive.
Oh, is he like in his 70s or something?
No, Ackman's a young dude, man.
Oh,
he's got to be like... maybe 50, 55. He's a pretty suave, dapper-looking dude, man. He looks like an investment banker. He looks like business, right? Like I don't know.
There must be some reason why people won't kind of.
He's a bit of a cowboy. I think he's a bit of a cowboy. You know, he goes out and he gets into these deals and he digs his heels in and really he really believes in himself. And sometimes things go wrong, and I think he's the last guy who wants to admit it to himself. But I think he's also one of those guys that when everyone else has cut bait and run, he's a guy who could, in a last-ditch effort, turn this franchise around. Because I really believe that. I mean, he's made a lot of good moves. You don't get to have assets of $20 billion with BlackRock and JP giving you any type of referrals ever in your life if you're not good at what you do, right?
Yeah, true.
Walmart, there's a rumor out there that they're looking to buy Humana, much like CVS bought Aetna, and get into the fact that Walmart has all these pharmacies already. You might as well get into the full health services gamut.
Why not?
Humana, big purchase. That would be the biggest in Walmart's history. Current market capitalization of Humana, $37 billion. That rumor was out there early in the week, and then we heard nothing else about it. So was there a conversation between Walmart and Humana? Do they continue to be ongoing? Is Walmart just looking at another company and things got misconstrued in the way people relayed the information? Is this all just a bunch of rumor and innuendo, people talking for the sake of talking? Who knows? But if Walmart is looking for a company, and they could be, because Walmart, they got some...
None of them came out and confirmed this.
No, there's nothing. There was rumor,
just rumor,
reaction, and then silence. So for days, 4 days, 5 days now. But Walmart buying Humana doesn't make no sense, to be honest with you. It makes a lot of sense.
Oh, yeah, it's crystal clear.
Yeah, I could see that being a really, really good move for Walmart. If they could handle it.
Sure, that's
because
a whole different
they
sector,
already,
right?
it is totally different, but they manage a lot of stuff under that Walmart brand now. This would really be adding in a lot more different responsibility.
Oh, yeah. I remember when Walmart was just like clothes and stuff like that, right?
They've
and
been
then
big,
they just added the grocery just a few years here in Canada.
Up here,
right?
yeah.
The whole grocery sector for Walmart up here in Canada is very new to us still.
10 years maybe?
Not even. I don't even think that long. I'm thinking like 5 years.
Maybe.
I'm thinking like that. I think it's still fresh up here.
Yeah, down there Walmart's been around.
Yeah.
But we didn't have it up here for the longest of times. Walmart's definitely becoming a much more international...
Oh, that's where I shop.
Me too. It's actually it's becoming more of a. You've got to be like Amazon in the world today. You need to touch a lot of sectors. You need to either dominate yours like Boeing does, or AT&T.
I think they're doing pretty good at dominating what they do, right?
They
still
definitely
number one
are.
in their sector.
They are.
But to branch out because you're already in the pharmaceuticals.
Because this moves them further away from Amazon. Because Amazon does encroach on a lot of the stuff that they do.
Oh, for sure, yeah.
Amazon's touching on a lot of stuff.
Groceries, stuff like that.
Touching on a lot of it and touching on the margins. You move away from that and get into something that we hear Amazon might get into, but isn't yet. This might be the first shot over the bow where, it's smart. CVS picks up Aetna, Walmart picks up Humana. It might happen. $37 billion market cap on Humana. Be the biggest pickup in Walmart's history. Lululemon. They need a new CEO. They're a great company.
Oh, I love
They're
Lululemon.
excellent. Yeah, I love. Yeah, ha, yeah. They're a great company.
Oh, for sure they are.
They're killing it. Like same store sales, the growth numbers
Last
are
earnings
ridiculous.
were good.
They're last few. It's a great
Yeah,
company. Like Lululemon is a solid Canadian company doing excellent work. Their athletic wear outpacing Nike, Adidas. It's good stuff. Really good stuff. On years like last 2017, Nike was down in athletic wear. Lululemon was killing
Crushed it.
They need a new CEO because Buddy got a little touchy.
They did.
Yeah.
Well,
he made a little relationship there. She was probably wearing Lululemon.
I was gonna say, well, she's wearing Lululemon.
He was probably wearing Lululemon too.
He was, of course.
Right?
Of course.
I don't know. Lululemon.
I'm not feeling that.
I'm going to the gym, but I ain't going to the gym like that.
No, me either. No. Maybe on squat day.
No.
Okay.
I've seen like Kai Green and stuff.
Oh, yeah.
Those like spandexy pants.
No.
I'm not doing that.
No, that's like form-fitting.
I'm not doing that.
No.
I'm not doing that. I don't want to squat with you or anyone else if they're wearing spandex.
How's my form, bro?
Spandex crotches. I'm going to skip the spandex crotch.
Yes.
But Lululemon needs a new CEO because Busy Hands there, he got expedited. He couldn't, gather yourself, right? Yeah. So they need a new CEO. Bloomberg has a list of 5. Stefan Larson, ex-Ralph Lauren CEO.
Oh, yeah.
Carrie Ask, she's a Levi Strauss executive. David McCrate, he just left Urban Outfitters, was in a high position there. Sam Sato, he's the CEO of Finish Line. And Satish Malhotra, the CEO of Sephora. I think...
I'd probably go. You said Ralph Lauren.
Ralph Lauren, definitely.
I'd probably go with them. Yeah.
I guess it really matters what direction you're looking to take Lululemon in.
Well, does Lululemon really want to go kind of like the makeup way, or
I don't know what direction.
I don't know how the CEOs are.
Got to expand somewhere, right? Can't just make yoga pants forever. Nike
makeup does kind of go with yoga pants, right? You get all dolled up.
I do wear a lot of makeup when I'm in my
too.
yoga pants. Yeah. Makes a lot of sense now.
It does. Yeah.
Cherry red lipstick in the 9.
There's a lot of unicorns in those stores, I can tell you that.
So, I don't know what necessarily you do there, because it depends on the direction, because you can't just sell yoga pants.
No.
Eventually, you need to diversify quite a bit and get out there and start taking market share from somebody else.
Yeah,
you continue to go after companies like
because just
Nike,
like yoga pants and like hoodies, basically, right?
Kind of. It's kind of a base.
We pass that store all the time.
Yeah,
right?
we do. It's a very basic. It's good at what it does. It's very good at what it
does.
does.
Oh, for sure. Yeah.
But it needs to move in a new direction. Is there the ability for it to just be yoga pants forever? Yoga pants. Do you see them going out of favor?
No.
Aesthetically.
Maybe shoes would be the next step.
Maybe shoes,
hiking boots or something like that.
So, do you get a CEO looking to make a acquisition and bring in a shoe company then maybe? Because you could.
Well, I would go with Ralph Lauren.
Ralph
Lauren
potentially. Do they do shoes at Ralph Lauren?
I'm pretty sure Ralph Lauren does shoes. I know they do clothes. I'm pretty sure they do shoes.
Yeah. Oh, they obviously do clothes. Yeah.
I'm positive.
We'll see what Lululemon does, but this is really the tipping point. This company's been growing at a really good rate.
Yeah.
This is going to be the person that takes your company into that next generation. This could be.
That's right.
This is going to be the choice. This is going to make or break it, because they're definitely on that spot right now where they could take off or things could really tumble back to earth.
Yeah.
So big pickup. These are the 5 that Bloomberg's put together. No saying that obviously they're the only 5 that Lulu might even be looking at. Apple soon plans to use its own processing chips in Macs by 2020. Apple's making its own processors, discontinuing its partnership with Intel. Intel shares were down really significantly on this news, as Apple and Intel have been partners for a long time, and they're partners in the phone and the MacBooks and all that kind of stuff.
Okay.
This is just with the Macs. Apple accounts for less than 1% of Intel profits. Once everybody calmed down in the marketplace was going crazy, right? Yeah. Everybody was having a heyday. They were selling Intel. They were selling the whole sector. They've been selling the whole sector anyway.
Apple impacts Intel by 1%, you said?
A little less than 1% of Intel's overall profits, especially when you just consider the Macs. I want to see, and Apple could say they said up to $500 million a year using in-house chips. I believe that was Bank of America, Merrill Lynch that said that. I want to see how much Apple's affected by making their own chips. How much stuff could go wrong there? They're not a chip maker.
No, they're just like
they're cutting
designer.
I know they're trying to trim supply lines when it comes to like some of the items that come in the phone and stuff.
Yeah.
Trying to make things easier, the OLED, and But like the idea that they're gonna make their own chips to me sounds like they're putting it on the line.
Yeah,
right? What if the generation of chips they make just suck? Their company only makes 10 products.
Yeah, that's true.
They only make 10 products. What if it just goes nowhere? What if it doesn't work?
Yeah.
Like,
well,
I know
they do have the money for the R&D that does go into that, but still.
But how many years? How many?
But who knows how many years they've been working on this for, right?
I guess, man.
They probably had this in the
to me, that's a way bigger story. The fact that they're not making their own glass screens. They're making the processors.
Yeah.
Those are big differences.
Yeah, that's true. Yeah,
from contracting LG to make your OLED screens.
Yeah.
To making your own processors instead of Intel.
Yeah, that's why you're paying the other people so you didn't have to do that. So it takes some like worry off you. Now you're like, oh, I'm just gonna start making the chips myself.
Because they could. It said so. I think again, this was Bank of America Merrill Lynch analyst said that they could save about $500 million a year from this. But how much would they lose if they started losing market share? $500 million a year ain't nothing. They're holding like $160 billion in cash.
No, I said they could, right? But
they're holding $160 billion in cash. Why take this risk to save $500 million? Are they in some sort of like cost-cutting phase of their company?
Maybe.
This seems like a risk I wouldn't take.
Yeah, no.
When people say, oh, Apple wouldn't buy that company, wouldn't buy that company because they don't like to expand outside of what they know. This is what you don't know.
Is that really that $500 million? Is it really that important?
You don't know processors, sir.
No.
Tim Cook might talk a lot of smack about not selling data to advertisers, but he ain't never sold a processor to nobody. Nobody ever.
No.
This is a bad idea.
He sold something that like sells itself.
This is a bad. Well, the jobs, but whatever.
Well, no jobs.
It's a great conglomeration of components with an excellent design behind it. But when you're talking about going and creating the actual processor, I don't care how much R&D you've done. Intel makes mistakes.
I'm pretty sure that's going to drive up the price of the phone, right? The phone's going to be more expensive because they're going to have to sink their own money into it instead of just giving it to...
These phones could brick. Could they not?
Yeah, for sure.
This could be the absolute death knell for this company. These phones, these Macs could brick day one.
Oh, definitely.
Because you've put a timeline on yourself. You've canceled your association with another company, so their supplies are going to
deals with what you want to do,
Dude, this risk seems... When we talk about Apple could buy Netflix or something, that seems so much more logical than making your own processors. What?
Maybe Tim Cook's hitting the sauce.
You make a phone. You make a watch.
Yeah.
You own iTunes. You don't make processors, silly.
No.
What are you doing, huffing glue?
Yeah.
That to me...
Like I said, you design products. You don't actually make them. Right?
Spooky.
It is.
Spooky, man. This could really... like. Apple shareholders, hey, I would look at this and say like...
Pump the brakes for a second.
You know what? It's the commitment that I'm scared of. What if going towards 2020, Apple starts thinking that everything's all gravy, that this thing's going to work just fine. They decide, you know what? We're going to go all in. We're going to do all the Macs right by 2020. We'll get Intel right off the books. Okay, 2019 comes. Oh, man, these processors are working great.
Yeah.
We're going to implement these in the phones by 2021. And as you're going into production in 2021, the 2020 MacBooks start coming out. And there's problem.
Right.
And you don't have the history to know how to pull from all the different problem-solving tools a company like Intel knows to deal with processor problems on how to get those fixed, expedited, quickly. My God, it could be a domino effect of issues. Why would you do this with the processor?
I have no idea.
I know that Apple, they purchased some companies that have some technology in this. It's not Intel.
Maybe they're feeling themselves.
I'm sorry. Yeah, maybe, right?
Maybe.
I'm sorry. This, to me, that jumps out way bigger. Forget about the own chips and hurting Intel. This strikes me as this could hurt Apple more than it could hurt Intel. NVIDIA, they're getting some mixed market signals. NVIDIA had a heck of a year last year. I love NVIDIA's CEO. That guy's awesome, and he presents so well. Citron, which is a notorious shorter, they said they see the price under $200. They said that late in the week. Currently, it's at $214.25. Wells Fargo maintains an underperform rating, saying that the GPU demand is falling as Bitcoin mining around the world is starting to slow down. So there's two telltale economic signs. They say GPU sales are going down, and they say they're directly correlated, right, tethered to Bitcoin mining, which is also apparently slowing down. That's what coming from Wells Fargo. Bank of America Merrill Lynch reiterates their buy rating, though, on NVIDIA, way off what Citron Research has at a $200 price point as they short it, as Bank of America Merrill Lynch has NVIDIA at $300 price target. So we have a range where some people think NVIDIA is still going to the moon, and NVIDIA is a heck of a company. Right. I think NVIDIA is strong.
Oh, me too. I think
top of the sector, man. Absolutely. Some people think NVIDIA's run far too hot for too long, and there's going to be a bit of a pullback before there's any type of new ceilings that they're broken through. Disney is ready to launch ESPN Plus. ESPN Plus debuts April 12th at $4.99 a minute. 180 Major League Baseball games around the year. They're going to have a new baseball game every day of the week from mixed teams from around the league. 180 hockey games from around the year. Yeah. A new game every day while the season's going on from a different set of teams all the time. So you get mixed groups of stuff you get to watch. Tons of soccer, all sorts of college sports. ESPN is going to have all sorts of original programming, like expose shows. It's going to be, you can imagine, it's going to be sports. They've got a historical catalog that they're going to be putting up. So tons of old stuff you can go back.
Oh, that's kind of cool.
Yeah, so tons and tons of stuff. That is going to be coming up April 12th, which is very, very, that's, what, a week from now?
That's not even Friday.
Yeah, that's right around now, right?
Yeah, next Friday, yeah.
Wow. Water.
Wow.
An hour and 34 minutes. A man needs some water. Disney is probably pretty excited about this. I would imagine this ESPN thing. This is the first step, right? This is that step. Bob Iger's sticking around. We discussed all this before. Sticking around because they're going streaming full on. Disney going streaming. This is that first step as they take on 20th Century Fox's assets, as they try to get that all sorted out. This streaming service, this is the first step into it. This is where they're going to make their mistakes. This isn't them jumping into processors right away.
Right.
This is them putting ESPN, a struggling brand, a brand that used to be worth multitudes of money, that has been struggling for years now, as the front line,
the tester,
the infantry, the guy who can get shot if it fails. Or the crash test dummy.
Because I'm sure when they come up with the actual streaming service, the Disney streaming service it's going to take off.
These are the crash test dummies. Yeah, this is to make sure it all works. ESPN, and they got a lot of stuff. So 20th Century Fox said they may sell Sky's news unit to Disney to satisfy regulators to get that deal done. Because remember, Fox isn't completely going to Disney. Fox sold all their studio and TV assets, but didn't sell their news assets. They own a little bit of Sky. They own the news assets. They wanted to keep the news assets from Sky. Apparently, maybe regulators having a bit of a problem with that being a sticking point, willing to sell the Sky news assets over to Disney, who already are in the process of trying to buy all of Sky, are they not? That's all kind of working together.
I think so,
There's a whole big... All the media guys are after Sky right now. Comcast, everybody's fighting to get a piece of Sky over in the EU. Speaking of the media, CBS, the TV station CBS, they do a few other things in the media. Chairman Les Moonves made $63.33 million in 2017. That was his total compensation. He sounds relatively compensated.
Oh, he's sad right now.
Think so?
I think so.
Think he's rocking himself in a chair with, with a deep weep going on.
He's got a big smile on his face.
$20 million bonus he got, not to mention a bunch of stock options that have gone up. CBS lowballed Viacom earlier in the week in merger talks, as CBS and Viacom in the media sector, again, everybody's pairing up because it's that time. It really is. The TV cable industry is dying out.
Oh, it's definitely
subscriptions
down,
are going down. Everything's moving to streaming. You're going to need content, which means you're going to need to partner with other original content creators. There's only going to end up being 3 or 4 at the end of this. At the absolute end of this, Netflix,
Disney for sure.
Yeah, of the guys we know of now, not including Amazon, Google, Apple, who are all getting off the ground right now, but are nowhere near as slathered throughout the marketplace where they have 100 original shows. You know what I mean? But when we look at these other ones between, AT&T, DirecTV, which is the same company trying to merge with Time Warner, Viacom and CBS, you obviously see Disney with 20th Century Fox, obviously has ESPN.
Who owns HBO?
HBO. Is that DirecTV? It's either DirecTV or Comcast. And then Netflix would be your other option, which already has a multitude of original programming out there, obviously, way past the level of anything Amazon or Apple or anybody else is doing. That's on that new generation of television. You know what I mean? They're the only new generation of television that I would say is on a level of the old guard that are all merging together as this sector starts to conglomerate itself and realize that survival is going to be original content, strong trademarks, and viable, cheap, margin-filled streaming services. You're not going to be able to just keep selling cable subscriptions.
And it's Time Warner that owns HBO.
Warner, so Time Warner going to AT&T. So, we'll move over there with the rest of DirecTV. And, it doesn't surprise me. These companies all have to get together. It's going to be 3 or 4. Is there anything good on HBO anymore? I do not have cable. To everybody out there who thinks I don't know anything about TV, I don't.
The last thing I heard about HBO is that when Bill Paxton passed away, that I believe they stopped that show.
I didn't even know Bill Paxton died.
Yeah, he died.
Damn.
Yeah, he died a couple of years ago.
I know, really? Yeah. I don't own a television.
Keep over, man. Keep over that.
I don't own a television or cable. No. I don't know anything about anything. Apparently, this Ready Player #1 was #1 in the U.S. this week.
Yeah, the Steven Spielberg movie.
I don't remember the last movie I saw. Maybe with you.
I think it was Deadpool.
Like, that's like 2 years ago, right? Gotta be. Maybe 3.
Yeah.
We're only in our mid-30s.
Yeah, we are.
We're at the gym 2 hours a day.
Yeah.
But we don't go to movies.
No.
I don't know anything about television.
Watch movies, really.
No. Netflix occasionally. I watch some documentaries on Netflix.
Yeah, I usually put on something when I go to sleep. Like
Netflix does a good... I like YouTube. I mean, personally, going to sleep, YouTube... Yeah. I like user-created content so much more than contrived studio content, which is probably a good reason why studio content's dying. Because user-created content, they talk about whatever topic I enjoy. I can search it out, and
that's exactly it. Yeah,
there's a lot more of it, right? So you end up when
you don't have such a limited selection. When you have such a streaming service,
exactly.
Right? YouTube, you can search it up.
Exactly, but Netflix is good. They do have a lot of good documentaries, but it's a conglomeration of those marketplaces. As we're seeing the S&P merging those sectors, the telecom sector and the media sector here at the end of the year, as those sectors need definitely a reorganization. BMO analysts up in Canada have come out and said, that's up here.
That is up here.
Up here, we're Canadians.
Are we?
We are. We're not Eskimos.
No,
They think we are. They think we live in igloos.
We do not have pet beavers or pet polar bears.
No, we like beaver, but it's but it's not. The beaver are fine. We're not hating on the beaver at all. Money. Yeah, that's right. We put the beaver on our money. Love a good beaver. Analysts at BMO have come out and said that Canada, again up here, that their oil and gas industry needs to merge, innovate, or face extinction. I think we've talked about this enough.
We have.
Canada's oil and gas energy sector and their financials take up 2/3 of the TSX, which is far too much. We're not diversified enough, and we have an extra refining process taking out oil sands as opposed to the oil that comes out even from fracking down in the United States, because it's much dirtier oil to get to actual marketplace.
Right.
Canada used to be a big producer. We're not going to be that level again, even though all the infrastructure exists. Canada is going to need to find a way to... Yeah, I would imagine the innovation's probably not going to be there. So it's the merging of the marketplaces that are probably going to have to be there, as a little bit of conglomeration might help. It might help at least level things out, because nothing's changed from the big drop-off. We've heard multitudes of times that things are picking up in the oil field, but they never really pick up enough where you see job openings. And like when I say that, I'm not saying that from a uneducated point of view. We live in what is a hotbed of oil money, where oil money is everywhere. And I mean, we know every second or third person you know had careers in the oil field, and you don't see jobs still available. I know a few people who have careers and connections that have got their jobs back from when we were at the absolute bottom. Yeah. But you don't know of any Tom, Dick, and Harry just getting a job working on a rig anymore, which in past generations used to be the case.
Yeah, we got a bunch of headquarters out in Nisku.
Yeah. Oil rigs. Oh, absolutely. Precision everywhere. It used to be big time around here, but the oil and gas industry across Canada suffers and continues to suffer despite the pipelines and the infrastructure and everything being there. It's just
maybe
costly, and
Beaver Drilling will take off.
Beaver Drilling, Beaver Drilling is a drilling company. CP Rail, the conductors and the locomotive engineers have voted to authorize a strike that could result in 3,000 workers walking off the job as early as the 21st of April. That could affect all sorts of people, truck drivers, shipments into every company, food, all sorts of stuff. Teamsters Canada is the ones that are obviously the union representatives for CP Rail's conductors and locomotive engineers. This collective agreement expired late last year. This would be the third strike that the Teamsters and CP Rail have had in the last 6 years. So they go on strike a lot. They're actually pretty used to this. Yeah. Walking the picket line is kind of just a part of the conductors and locomotive engineers' career. Apparently, some of the stuff they're asking for is more predictable schedules. They don't like the fact that I guess they're on call maybe.
Oh, okay. And nobody wants to be on call.
No, nobody does.
Oh, no.
That
sounds like a call at like 3 in the morning.
I quit a job on call. They gave me
you did.
They gave me a phone the very first day I worked. They gave me a cell phone. I guess I thought that gave them leeway into my personal life. And they gave me this cell phone and said, okay, you start work tomorrow at 8 o'clock. I thought, all right, I start at 8 o'clock. I have an alarm set. I go to bed at a certain time to get up and get ready for 8 o'clock. The phone, which I didn't turn off, rings at 6 o'clock. Could you come in right now, they say to me. But I work at 8 o'clock. Right. Yeah, I know, but we need you right now. And I thought in my mind, all right. So I came in. And I came in to give them their phone back and to quit that job because you didn't give me a job and a phone to allow you to be intrusive into my personal life. So unfortunately, that had to be the end of that relationship. Bad working relationship that was. So yeah, that's that for the headlines, my friend. That's that for headlines.
On to some earnings. We have tons and tons of earnings. Oh no, that is next week.
Yeah, next week.
Next week is earnings.
Financials next week.
Yes, yeah.
J.P. Morgan, BlackRock.
The big guys.
Wells Fargo and Citi, I think. Not everybody. I don't think Bank of America.
No, but some of the big hitters.
Yeah, big ones. I don't think Goldman. But there's some big ones. Some big ones next week. Because earnings season definitely kicks off. First quarter's over now. First quarter ended beginning of this week. Right. So... yeah, I'm ready. I'm expecting that earnings next week is going to be good, that we're going to see a lot of these EPS numbers inflated. The analyst expectations as of right now is for EPS to increase in the first quarter to up to 18.4% on average, thanks to tax reform. That is a significant increase estimate, and I would imagine that we're going to meet those estimates, and the market's still not going to enjoy it.
Probably not, no.
I think things are going to come in relatively fine across all sectors. I think we're obviously going to have a couple of outliers that do better than we expected. Yeah. We're going to have a couple of people who we expected to do well that do poorly. We're going to have some sectors that are laggards and some sectors that seem to still be doing very, very strongly despite the market's adjustments of their stock price. Right? They're still doing strong in business. But I think overall we're going to see... most analyst estimates beaten top and bottom number, and the economy continue to push forward despite everybody bemoaning all the problems out there. Yeah,
that's a good way of putting it. Yeah. So what do you want to start with? Do you want to start with Monsanto or Lennar?
Yeah, Monsanto earnings per share of $3.22, missed by 9. Not $9.09. Revenues of $5.02 billion. Well, $9 would have been an exorbitant miss, right? So
Yeah,
$5.02 billion in revenue, missed by $320 million. That number of revenue off 1% year over year. Monsanto started the week 117.20, closed the week 117.86. Not really a whole lot of change. Seeds and genomics sales down 2.3% year over year. Corn seeds and traits down 6.2% year over year. Soybeans and traits up 6%. A lot of these, the sales of the manufactured product of this, I'm not sure if it's so much the seeds, but the manufactured product of this is being tariffed by China. I'm not sure if the seeds are a part of it. It could be,
right.
But I know the actual manufactured corn, the soybean, all that stuff is all being tariffed. That's a part of China's tariffs on all the agriculture coming out of the U.S. Proposed tariffs. Tariffs. Monsanto in the process of merging with Bayer.
Bayer, that's right.
Bayer AG.
Yeah. Bayer actually has to sell off some of their seeds and herbicides. They say the assets, but they're not sure if it's like a whole division or if it's just certain assets they have to sell off.
Some of the patents or something
to make
some of the concoctions.
Not very clear on it, but they have to sell it to BASF.
Well, they're making the sale to BASF. They don't have to.
No, they don't have to, but
BASF is definitely
the
competitor out there.
For the sum of 5.9 billion euros or $7.26 billion. So, it could be
that merger originally was like 62 billion,
but now it's up to 66.
66, like $128 a share.
Yeah.
It's going to be a big one. Yeah, some of the stuff that Bayer does and Monsanto do just cross over far too much for regulators. So they had to get rid of a little bit of this.
Bayer's selling their agricultural and biotechnology sector.
The assets. The assets. Not particular on what exactly that means. It's probably a decent amount because what's the BASF one is $7.26 billion, right? So it's a big sale. It's a big sale. So it's definitely quite a bit of stuff they're moving over there.
Oh, for sure.
Lennar is the other one, biggest home builder in the United States, based out of Miami, Florida. 260th on the Fortune 500 last year. EPS of $1.11, beat by 34 cents. That is a drubbing, buddy. $1.11 beat by 34 cents. Revenue at $2.98 billion, beat by $400 million. The revenue number up 27.4% year over year. Started the week at 56, closed the week at 61. Biggest home builder in the country, pumping it out, doing fantastic. New home orders up 30% to 8,456. The backlog increased 95% to 17,566. It's because they bought another home builder, so they took on their backlog that was like another 8,000 homes. So they didn't just add 95% to backlog this quarter. Lennar's looking to sell its Rialto Capital Management division. So they have an investment firm underneath Lennar's home building company because people have weird subsidiaries, and that's just the way business works. They're looking to sell it though if they want to get out of the capital management business and want to focus solely on the home building. Like I said, they just picked up another company there. It was 3-4 months ago that they've implemented into their company. Apparently it's doing very, very well. Obviously, Lennar, the biggest home builder, the best home builder in the United States, bigger than D.R. Horton or Pulte Group. These are the big boys. Homes are still selling. People are still buying them. The backlog continues to grow. These guys are willing to continue to invest in home building, seeing the U.S. economy continue to grow. As you see, they're getting out of the investment banking, purchasing other home builders. They see their money invested properly into home building. Obviously, money is going to continue to go in the right direction because, like I said, I think this time, as opposed to in 2007, when lenders were lending money, even in the most prosperous times with interest rates low, they were doing much more egregious background checks on people's financial liquidity to make sure that when interest rates did rise, like they are rising now, that people would be able to sustain paying for that mortgage. We wouldn't have defaults, and companies like Lennar would be able to continue to sell new homes. That is the end of the podcast.
That is our longest one to date.
There was a lot of news, it felt like.
There was a lot of headlines, not enough earnings.
A lot of yapping.
No.
I rambled on.
Did you?
Yeah, I thought so.
No.
Yeah, there were a couple of times
I didn't hear you talk this podcast.
totally zoned out,
about?
was just babbling about God knows what. Something.
Yeah, there's a couple times I blacked out and just popped in and out.
Yeah.
Whoa,
Me
where
too.
am I?
Me too.
Yeah.
I woke up talking. It was the weirdest thing.
It was very weird.
A couple of times I looked at you and wondered, are we even recording this? Or we're off.
Oh, sometimes I've looked and be like, oh, no, we're not recording. Oh, yeah, we are.
So that's this week on Wall Street.
This week.
I look forward to Thursday. I look forward to our little debate, having you on camera.
Me too. Yeah, me too.
This is a pleasure doing this with you.
Always is a pleasure.
Markets are doing a lot better than the news would lead you to believe.
Yeah.
That's what if you want to deduce this down into one sentence.
It's not really scary.
Markets are doing better than the news would lead you to believe.
That's
the word. I'm Cody from Wall Street Breakdown.
I'm Anthony from Wall Street Breakdown.
You're going to be up for the next 3 hours till 1 in the morning
I will
uploading
be.
this to YouTube, and I will be fast asleep getting my beauty sleep. How I can get better looking than a 10 is beyond me, but apparently I'm going to try my damnedest. I'll see you again next week, but I'll see you on Thursday. You better bring your debating boots. I'm ready. I'll bring it. You guys out there have an outstanding week. We are sorry we weren't here last week. We hope we somewhat entertained you this week, and we'll be back again next week for another podcast. I'm Cody. He's Anthony. You guys try to stay out of some trouble, but get into some trouble if you're into it. Do what you want to do.